Good day all. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is your weekend edition for Friday, the 10th of January, 2020. So here we are getting after 5:10 p.m. I'm still in the office doing what I wanted. I was hoping today to have another special video report out. I couldn't do it. We were too busy with the grain markets and the other reports. Speaking of that, we did get the USDA Ag report. At the end of it, here's what I'm looking at. Just more meal that was used. In other words, more feed consumption than I thought the market was looking for. That put most of these markets to the upside. That is history now. That's all the report was worth. Now, what the market's going to go looking at is what is in the U.S.-Chinese trade deal. That is what we're all looking to see. We know that the president keeps touting somewhere between $40 and $50 billion worth of agriculture. What agriculture products? What's the quantity? I don't think the Chinese in this deal are going to say they're going to buy 50 million tons of this, they're going to buy X amount of gallons of that, but we'll see. Let's see what the details are, and that's where the devil always is, in the details. So, got a bid today there. Bonds and notes up, even with good, and I mean solid, jobs data, but not the stellar numbers we had in December. Nothing like that in any manner. These numbers are starting to pull back. And women, great job performance, absolutely phenomenal. I think one of the highest readings we've had in way, way long time. And yet the stock market's down. Okay, it's a Friday. A lot of money got placed in the market since the first of the year. It's only the 10th. It's been one direction, and obviously some people want to book some profits. Why not? They don't have to pay on those profits until April of 2021. So those that didn't want to do anything in 2019 and did it right now, I think some people are putting ammunition in the gun, if you will, waiting for pullbacks in the market. As you look at the chart for the monthly, we're only down 8 cents. It's only the 10th of January. There's a lot of time to go. You can see that you had a strong month the month before. You gained 66 cents in December. Come on, that's pretty strong. Now the market's backing off a little bit. Okay, but after a 66-cent gain, nothing wrong with that. Now the market's waiting to see what else. But the bias of the market is to the upside because it is on the red line, which is the 18-month moving average of closes. It's over it. When I come to the weekly bar chart, you can see this pattern where you came down, back up. Now, traditional chartists are going to say you have on this minor formation a head, a shoulder right here, and another shoulder. And if the market can get over this number and start breaking over 960, I will be shocked that we don't hear the head and shoulder people come out of the woodwork. We'll see if that happens. When I look at the chart, I have a pattern that's bullish. Higher lows, certainly higher highs. The key is not to take out 926 3/4. If you take that out, you start drifting back to the downside, and you could drift as far as this 912 area to find support, and it's going to be a little higher than that because this market's been jumping approximately 4 to 5 cents a week on the weekly charts. And because you had another strong close, I would assume we're going to be in that general range of a jump. So I'm going to look for the 915 or so area to be the first support zone. As for the resistance zone, look at the black dashed line. It's called a Bollinger Band. It's an algorithm designed to keep the market trading within them 95% of the time. Can they get out of them? Of course they can. That's why it's 95, not 100% of the time. But often, what the market is saying, if the market's under that, you'll probably get another chance to come in, maybe at a better price. But buying over or selling under a Bollinger Band is simply something I tell people never to do. If you take out that 926 3/4, I'm looking for market to come back here. What else happened on the weekly chart? Do you see how the red line got what? Over the green. So we had a bullish crossover as well. Resistance, 952, the upper Bollinger Band, and momentum still pointing to the upside. Now, in the weekly charts, I don't look for overbought or oversold conditions. I just look, is it pointing up in momentum, down, or going sideways? It's pointing up, bias up, trend up. In the meal market, battleground, 18-week average of closes. The market's got a pattern of lower highs and still lower lows. We don't know where this low is going to end up just yet. Battleground, 18-week average, momentum flat as can be. Soy oil. Unfortunately, it got ahead of itself last week when the market finished off at 34.81, just over the upper Bollinger Band. You rarely spend much time over a Bollinger Band. I count each successive day or week, it doesn't matter to me, as one of those percentage points. Now, in this week, you settled 32.27 over the Bollinger Band, week one. Week two, the market closed over the Bollinger Band. 2 weeks in a row. I use consecutive closes and I subtract as a rule of thumb each consecutive close from that 5%. So now I'm looking for a 97% percentile that the market will get back under the Bollinger Band. It doesn't, it's going higher. I'm not bearish. I'm looking for when the market's going to roll back. And finally you get it. You came in with about a 2 percentile left that you'd stay over the market, and that's all that I'm looking for. Now, I'm still friendly the market, but in between here and back in this support, there's a big gap. You have to go to the daily charts to see what to do. On the corn market, you have a lower low, higher high pattern. The market came right into support this week against the 18 and the 100-day average of closes. The 18-day average is 378 and 3/4. You closed back towards 385 and a half. So the market's still looking good. The pattern, well, I wish I could tell you it was bullish. It's not. You've got the lower low, higher high. If it can pick up from here with a move just this week over whatever the high was of 387 and 3/4, hit 388, then the swing line, the way that I've created it, will move up. And you have to wait and see if that's eventually taken out. But at this point, that would make the market even more bullish. In the wheat, still bullish. You've got the pattern of higher lows, higher highs. We keep hearing, and I keep writing in my commentary letter, that I think that the strongest markets right now happen to be the wheat market, the cotton market. I think the Chinese are going to buy DGE and the product out of Milo called White Lightning. I know that sounds nuts, right? But it's a product that they use in their alcohol, consumption alcohol. It's made a certain way. It can't be done. They explained here the whole thing to me, how it can only be done in a steel barrel and what it's used for. And it's basically, it's mixed with other products and it's alcohol, drinking alcohol. In the cocoa market, the market's bounced away from the 18-week average, but it's hit it now 4 weeks in a row. The pattern had been lower highs, lower lows, and the settlement this week at 25.89 is over the 18-week average. So on the longer term charts, you've stopped the downside momentum, you flattened the market out, but it has not entered even a pattern where it said that the bears aren't in control or the bulls are in control. It's neutral as I see it on that. Sugar market, new highs on this whole move. Momentum still pointing where? Still upward, hasn't backed off at all. The pattern, though, is a funny one. Sideways action until just this week. Look at how it was working. Lower highs, lower lows, but over the 18-week average, so they two balanced each other out. If you take out 2360, you negate that part of it. Now the question is, can you get to the upper Bollinger Band? The key number to keep watching, 1310. You slip back under that, you're in the middle of nowhere. On the weekly chart, coffee's been in a correction and still overall what? Neutral. You've got the swing line down. However, you're over the 18-week average. The two counter each other. The daily chart's been bearish as can be, and the market's been falling. The longer-term charts are saying, nah, that's just noise in the market. You're not there yet. Cotton, this is quite bullish action. The market still has momentum pointing up, trend up, bias up. See the difference between how these markets start looking and just hanging at that Bollinger Band. If it keeps going, 74.40, that the 100-week average in green, the resistance zone. Cattle, longer-term chart, still bullish as can be, just like cotton. Higher lows, higher highs. If you look at the daily chart, you're trying to get action to break out. This is broken out. You've got the 18-week average over the 100, market pushing on. It's just waiting on the daily charts, but target could be the 132.5 zone on this chart. In the hog market, if you look at the daily Feb or the April charts, it's confusing. When you go way back, you see the bullishness of the Chinese in the market anticipating large purchases. In the meantime, you have a pattern of lower low, higher high, fought a battle at the upper Bollinger Band, couldn't get through it by any reasonable amount, fell back to the 100-day average, next support the 18, but the market has upside bias. If you watch the markets, you know that one of the things I do, if you're keeping up with my videos, is I put out special video reports. Now, I did my metal report. My metal report went up on, I think it's January 8th, so 2 days ago. In it, I give you the commentary that I'm seeing, what I'm looking for over the next 2 to 3 weeks. That's what they're built about. They're only up for 5 days, these reports, by the way. They're not meant to be a history lesson. They're meant to get you to watch them if you're interested. I cover price counts in it. I cover the seasonal factors, the 30, the 15, and the 5-year. I go into the weekly, and then I go into the daily charts. And I'm doing it, I think, on the April gold to give you an idea as to what I'm seeing coming up in that trade. So if you haven't seen it, it's going to be up, I think, until Tuesday, and then it'll be off. We put it up 5 business days. Go to our website, under the word research, click it, you'll see the drop-down menu, and you'll see metal reports dated 1/8/20. Click it on, enjoy yourself. I'm Ira Epstein. You have a great weekend. If you have any questions, call and leave them for us on our service, and we will get back to you come Monday. Take care now.